Welcome back, ladies and gentlemen, to Market Talk. I'm Mike Pearson, sitting in for Jesse Allen this week, but we do still have a lot of the same information coming, including the Monday conversation with John Heinberg at Total Farm Marketing. He joins us now. John, this was quite a day in the futures markets with wheat, with soybeans moving. We saw feeder cattle fall off. Boy, the trade was just active today, wasn't it?
Yeah, very active Monday, especially that grain market in terms of the money flow and continued short covering being basically led by wheat and soybeans today. Corn seemed to be a little bit more of a follower overall. Just could really get some gas under it, even though 8-9 cents higher doesn't look too bad. But when you got wheat pushing 26 higher and you got beans pushing 30 higher, I like seeing them doing a little bit more out of that corn market, get July through that 470 handle. But I would assume we're seeing some pretty good selling pressure coming in here from producers as we're hitting some targets that we were just hoping to get to a few months ago.
Absolutely. John, what are you seeing basis-wise cash prices around the country? Are they staying firm or are we starting to slack off a little bit?
That's an area that we're really watching very closely. They've been staying very firm. I think a lot of that was tied to the planting pace as guys were really pushing hard here before these last rounds of rains came through. Now we're getting to a spot, the National Corn Index, which takes into account, basis levels average across the country, is getting close to maybe a peaking point. Last year, it actually peaked out on the 2nd of May. Right now we've been trending nicely higher right into that same window. So it's going to be one of those areas I'm watching very, very closely, because if we do get some corn moving here and get some of this, maybe a little bit of pent up demand by the end users, just because of planting going on, that we could see those basis level fall apart. But I'm starting to hear a little chatter of that out there, that all of a sudden, even with this rally, some of those prices are starting to hold a little bit more instead of continue to climb.
All right. John, as you think about the crop progress report coming out later this afternoon, on the corn front, what's the trade expecting here on this new crop planting progress so far?
Yeah, we're looking at about 40% planted today, and that seems maybe a little aggressive. We'll have to watch, 39 to 40%. It's kind of what we're seeing as the target right now. Now, if that does come into play, that'll put us right in line with the 5-year average. So we had a good start to get this crop in the ground. It's not like I've talked about 2019 and we've seen that scenario talked about a little bit. 2019, we couldn't even get in the fields. That was the year we had 19 million acres of prevent plant. I think we're in a bit of a pause here. I know, just talking to producers, they're getting a little antsy because now we're into May, but some at least got something started, at least on the western side of the Corn Belt. Eastern side still dealing with a lot of wetness. So watching those forecasts, seeing where that comes into play here over the next handful of days. I did talk to a few guys that did kind of catch a dry window, got some things done. But, a 13% jump given the weather might be a little bit of a reach. So we'll see how that plays out in the market tomorrow. Soybeans, we're thinking 28% planted. That's still a very strong pace because a lot of guys are pushing soybeans in first before corn because of the weather, figuring those beans can handle that a little bit better. So we'll see what the pace kind of puts together today. That could be a bit of a market mover tomorrow, as we've really aggressively sold this or got out of those short positions on the fund side. And now it could be at a window. Maybe we just kind of peak out here on a really good, strong Monday, kind of topping this thing out if we get some negative numbers and that USDA report coming up on Friday.
What are you expecting to see on Friday, John, when that number comes out? Is the trade going to be watching closely?
I think it's going to be a couple things going to be very key. Soybeans, and one is going to be the demand side of the equation there. Yeah, I expect to see at least some type of a cut on the export side for soybeans again. Even with this, even with the maybe possible issues that are going on in South America, the Argentina beans are coming to the marketplace. Sounds like China's looking at Argentina beans now because they are significantly cheaper than ours. Brazilian beans have been on the rise, and I think that's some of the reason why soybean prices have been so well supported until this breakout move here. Is just the fact those Brazil premiums are on the climb. Obviously, the weather we've seen in Brazil last week in the province of Rio Grande do Sul with the flooding issues. Now we're starting to get a good figure where maybe that did in terms of damage. You've heard a whole range of things, but it sounds like maybe about 3 million metric tons, could be lost there regarding that flooding. Obviously not reflecting, the human toll and concerns in that regard. So I'm looking at Friday's report. You'll see that on the old crop side, corn, maybe we get a little bit of a demand boost. Export sales and shipments are running where we need it to. To me, the biggest numbers I'm going to be watching at are going to be those new crop numbers, especially for corn. If they kind of stay true to their averages, we're going to see a pretty big number out there. Now that may be our biggest carry out number for the year. And then from there, things can work itself lower based on yield, weather, planting pace, all those things. So it could be a very interesting day Friday, how this market reacts, especially if we continue to run up into that report. Might be setting ourselves up for a bit of a swing lower real quickly if those numbers come in heavier than we think.
Given that we've got that risk, and it's 1 day risk, John, coming at the end of this week, is this an opportunity for producers to look into short-dated options? Is that something you're exploring, given the risk on Friday?
Yeah, we are looking at those options on both sides right now too, in terms of calls as well as puts, as well even some of the shorter term options, just to make sure we got a little bit of protection in the accounts. It's a swing point. Very well could be a goalpost setter, which it typically is for the year. And we'll have to watch it from there. So a lot of times we see pretty good reactions around this report. And then we see the market kind of kick in one way or another. So that's what makes me, like I said, the most anxious about this is I think the funds, at least in terms of corn and wheat, maybe getting there with soybeans after today's move, are getting to a point where they got some flexibility. If the report comes back on the friendly side, they can put the foot down and kind of keep things moving to the upside and continue to exit short positions. But if they get something they don't like and it just makes them bring that negative sentiment back, now they got room again to push this market lower. So a lot of volatility going into Wednesday. Make sure as a producer, you're looking at your crop, looking at what you got out there. Where's the risk? Maybe look at some of those shorter term ideas just to get you through the next month or so. Typically, we rally until about Father's Day, and then that's maybe a point where we could peak out as long as the weather's decent.
Absolutely. That mid-June time period, that's where all eyes focus on the weather. Speaking of weather, John, you mentioned the challenges that are facing South Brazil right now, Rio Grande do Sul. Let's talk about what we know there. You mentioned potentially a 3 million metric ton hit on their soybean production. How much, or is it corn production, could be hit 3 million metric tons, John?
That's soybeans.
Soy.
Rio Grande do Sul is the number 3 producer typically in corn and soybeans for that region. This would be some of the early corn that's getting harvested that could be affected here. Obviously, the soybean size, they're expecting Rio Grande do Sul to be around 22 million metric tons this year coming out of that region. They've had very good weather all the way through until this heavy wetness came through. So they were actually going to be one of those crops that was going to absorb some of the tougher areas on the Brazilian production side. So, again, pretty key spot. We'll see where they are. They were about 62% harvested. I saw a number last week. So there was still a portion that needed to be covered. Again, the floodings along the river fronts and river areas, how does that get into the crop ground? I mean, obviously everybody saw the pictures on social media and news wires and that type of thing led us probably into some reaction in the marketplace. And we'll see where it goes from there. On the Argentina side, too, some wetness there, delaying some of the harvest side, bringing prices a little bit higher there. I think that's been some of the factor in the soybean meal market the last couple of days. Still trying to decide which one's leading which. I think actually soybean meal has led the beans higher here. Today felt like a little bit more beans pulling soybean meal, but another $15 per ton up day in soybean meal, just kind of tells you something's moving. Both those markets, especially that meal market now, has really exploded, $40 a ton higher in the last 4 days. Might be getting a little long in the tooth here, so something to be careful of. You get these, type moves like this can turn into a V top very quickly if the market gets something it doesn't like.
It's incredible, John. I had not pulled up a chart of meal in a while. I pulled up July soybean meal here. It is parabolic over the past month. The upturn here in meal prices, given that kind of volatility, given that kind of upsurge, what's a potential upside target that you're watching here since we've been down for so long in meal?
Obviously the big number is going to be got a trend line coming through about 395 on that July, so maybe another $10 or so. $400, obviously a big psychological number. Given some of the global supplies, some of the demand concerns that have been out there for meal all spring, kind of makes me feel like this is a little overdone here. But at the same time, again, we are still seeing some upward movement. The money is flowing. They were pushing a big short position in meal as well. The funds were, and they've been walking away from that here over the same time frame. So, got to watch it. Now, today, at least, I think the other big strength in soybeans today, soybean oil finally joined the party. It's been a very depressed crop or product in the marketplace. Saw a good update today, trade 70, 80 cents higher per pound. Maybe that's a bit of a bottoming signal there at this time frame. So that is something we have to watch because really, as much as meals tried to rally, soybean oil has really kind of had the brakes on this thing at this time frame.
And John, that as we think about what has been moving the news in the soybean market, it's been expanded crush, record crush, all this crush demand. And then as we peel that back, I've been told so much of this crush demand has been driven by oil demand for whether it's renewable diesel or biodiesel, you name it.
Mm-hmm.
How do we jibe that with the fact that oil has been a weight on this soybean market here? Meals really, it sounds like, been carrying the load. Is that right?
Yeah, it has. And actually recently and over the last couple of weeks, we've seen some pretty depressing articles regarding that soybean oil and that crush capacity. We're actually, because of the ability to bring imports in, bringing in used cooking oil, even beef tallow has actually come and become more profitable for some of these industries to refine into that biodiesel. To the point, a Reuters article came out last week, a Bloomberg article as well. Just talking to even some of those firms that had plants on the table getting ready to put together over the next year or two, they're holding those back. So maybe some of that crush number is a little bit over optimistic. We'll see. I mean, we're still putting record crush in now this year, and that's something that's still going to show up in the balance sheet. That's one thing I'm going to start watching, though. What is the USDA putting out there for 24, 25? Do we see those big increases? Because right now, because of the export demand and the concerns that we have there, that we need to see that crush absorb those losses in export bushels. And I'm not sure if that's coming together like we've seen. I do think that was some of the factor that came into the soybean oil market. There were so many groups, outside interest money, that was buying that soybean oil market on that potential of that biodiesel side. And when they started seeing some of those headlines turn south, plus just the pressure from edible oils, it just became something that they didn't want to be part of anymore, already probably getting well behind on some of those long positions.
We're talking now with John Heinberg of Total Farm Marketing, getting an update here on today's market moves. And John, we're talking a lot about exports. We're obviously going to be watching those export sales reports as we get deeper into the summer. What do you expect them to look like given the strength we've had recently here in the US dollar? Is this going to be a headwind for the industry for the foreseeable future?
That's something we'll have to watch. US dollar kind of turned over a little bit last week. We'll have to see how that comes in. To me, it's still coming down to global competition. And everything I still want to see with all these changes or adjustments that we're seeing from South American bushels in terms of production, are we seeing any adjustments in their export expectations? And at this time frame, we have not.
Okay.
And so you go look at, again, on the soybean side, that's probably the one of the most biggest concern right now is that soybean market. The numbers are, for lack of a better word, dismal there. And we need to see some business kick in, and we're not seeing it. Export shipments, 390, or inspections today, 390,000 tons, just not moving the needle, okay? Had a decent week of export sales last week, but 400,000 tons is, again, not enough to really get this needle moving. The biggest thing that's got me concerned is looking at soybeans going into next year, the new crop sales. We basically don't have a sale on the books to China as of this point. Maybe they're in the unknown destinations pile, but we are well behind where we need to be compared to last year on soybean export sales going into the 24-25 marketing year. That'll be a number I'll watch very closely on that report on Friday, what the USDA does for those soybean export projections, which really could be a major player in this market. Corn, on the other hand, things have been going really well. And again, maybe we get a little adjustment up. We'll have to see. Export inspections are running 33% ahead of last year. USDA's forecasted a 26% rise on the year. So we'll see how that comes together. But the last couple of weeks, sales have slipped. I mean, we haven't been over the million metric ton mark for a while. Some of that may be due to the fact prices are rising, and now we're not getting competitive to the global scale. So that's something we need to keep an eye on here. Maybe it's some of the reason that corn market really just can't kick out is just the pure fact that there's just too many bushels out there. The demand is still a concern until we get a real good handle on the supply in terms of what's available to the marketplace. This market's just going to stay limited in terms of its upside, even though we've had a pretty nice move lately.
We certainly have. John, speaking of a nice move, we can't let you go without talking about this wheat market. Big rally again today, July up 26 cents. I mean, double digits all the way down the line. 650 July wheat. Is this a selling point, or do we still have legs under this market?
It's another one you got to look at the rally and reward it in this time frame. I mean, we're looking at 550 wheat, a handful of days ago. Now we're $1 higher. If I got supplies in the bin or supplies in the field, that you just got to keep trickling it out here. Again, don't get piggish in terms of your targets. The the thing is that with all these grains right now, get some targets out there, have them set above the market. Be happy with those targets. If it hits, you get some more bushels priced in. If we keep climbing, you got another target up there, or you got more bushels in the bin or the field. So obviously too, you got to take a look at next year's wheat. July 25 wheat, 716 today. That's $1.25 off the most recent low. The global wheat supplies are a big question mark. We got some Russian dryness, and that's firing up this market a little bit here. Obviously, we're concerned about the KC wheat belt. We'll see those ratings today. Are they, maybe pick up a little more rain? We'll see. It sounds like it's going to keep staying dry in the western half of the Kansas crop. That's some of the reason we're seeing some push. I do think we just saw some pretty good short covering on that May contract today too. We're almost done with that May contract, and a little bit of a squeeze going there against that, and that brings some buying strength throughout the market as well. But wheat's got a nice story. The technical side still looks very good. Funds have really gotten out of that short position. It was only 40-some thousand contracts, 49, I believe it was, for the Chicago wheat, on last week's commitment of traders, and we've been pretty good buyers since then. But wheat's one of those ones that can move very, very quickly. That's why, again, producers set targets, pick up some puts on strength. I'd rather be wrong owning a put with my bushels going higher.
Absolutely. We talked KC, we talked Chicago. Any concerns here in the spring wheat market as you look out to our Northern Plains producer friends?
We got to keep an eye on the planting pace today. Obviously a lot of wetness, another good sized storm moving through that region today, so that could keep things limited. That's been to kind of help and support that spring wheat market. So that'll be something we need to keep an eye on going forward here. What do the numbers show us today in terms of that planting pace and where it's at? Obviously, Canadian Northern Prairies are kind of on the drier side right now, so we'll have to watch how that plays out. That's been a couple things that have been helping out that spring wheat, as well as that oat market a little too, which we don't talk about a whole lot. But there's been a nice climb in that market over the last couple of weeks as well.
There has indeed. What do oats know, John? Is something cooking out there?
That's the old saying, but I think that's kind of gone by the wayside now with the way we do things. But typically, if oats wasn't getting planted or in the ground, that meant that we were going to have delays in terms of the corn crop. But with modern technology today, what really is a planting delay anymore? We get a good week of weather, and guys can get most of this crop in, as we've already proved over the first few weeks of the planting season.
That's true. They can turn and burn. John, before we let you go, we saw all the green today on the grains side of the futures markets. Livestock, lots of red. What was the weakness, or what happened here in the cattle trade?
Cattle trade's very choppy right now. Kind of neutral on it. I want to be bullish. I like the fundamentals, but I'm seeing some things I'm just not a big fan of. Most of it comes down, at least in live cattle, the retail market. We did at least get some strength today in that retail market. So, we're supposed to be in grilling season. We should see some buying in that choice box, and we're not getting that right now. So we were down on the week again last week. That leads over to a steady to soft cash market. Now, so with that cattle market, just whether it's just concerns regarding consumer dollar, I do kind of think the HPAI headlines they're there. And I don't know if they're a player or not. If they were a factor, I think it would be bugging the dairy market as it continues to rocket to new highs for the year. So I think it's more of just the money flow saying right now, hey, we don't trust the consumer buying US beef or buying beef off the retail side. We got cheaper pork, we got cheaper poultry out there for them. And they're just a little cautious in here. Plus, we're putting some big weights in right now in terms of carcass weights. That puts a little more pounds in the cooler. And then you look at the feeder cattle market too, a little bit defensive today, obviously with the stronger grains. So it just might be a window here. Maybe this cattle market just chops around for a while. A little concerned maybe we go push to a spring low if we can't hold these levels. Well, I'm still watching that third and fourth quarter and these cattle numbers really tighten up again. So that might be a window that we have to watch, especially if the consumer stays healthy.
I was going to let you go, John, but you brought up dairy prices. That milk rally, incredible right now. What's happening in there? Is this something that can persist? Can we see $20 back in Class 3 milk?
I think it's a good shot. I mean, right now with the momentum of where it is, cheese trades continuing to climb. We're see rise again in blocks and barrels today. And again, this is a market supposedly dealing with the avian influenza headlines. So you can kind of tell me maybe we're past that cycle. It's become old news. I mean, you're looking at a milk market. 1st of April was under the $16 handle. Now we're trading mid 19s. That's a heck of a move in the month in that marketplace. So opportunity though for producers. Again, there's no market out there that V tops or V bottoms more than the milk market does, just because of the lack of players. producers need to be active here. You've just got yourself a reward that you didn't feel like was coming all the way through the months of March and April. Make sure you're getting something put together in terms of protection, whether it's revenue insurance, puts, sales. Take advantage of this.
Absolutely. A reward is only a reward if you put it in your pocket. If it stays on the board, it doesn't do you any good. John Heinberg, Total Farm Marketing, thanks so much for joining us here on Market Talk today.
Sounds good. Have a great week, everybody. Thanks for your time.
Folks, stick with us. We'll have more Market Talk coming up after this.